Wondering how to buy your first home in today's market without burning out financially? It's a lot like training for a marathon. It takes preparation, discipline, and knowing when to refuel so you don't collapse before the finish line. I'm Gemma, Leggett, real estate broker with Remax Hallmark, your group here in Innisfil and Barrie, Ontario. And if you have ever thought running 42 kilometers sounded easier than saving for a down payment, you are in the right place. So lace up those sneakers, grab your water bottle, hit like, subscribe, and let's break down 5 financial lessons you need to know before buying your first home. Lesson 1, every marathon runner needs the right fuel. And when it comes to saving for a home, the first home saving account, FHSA, is your financial protein shake. It's tax-free and helps you build up your saving faster. You can contribute up to $8,000 per year, up to the maximum of $40,000. So if you start early, you'll have some serious financial gains. Skipping this step is like trying to run 42 kilometers fueled only by coffee and regret. Don't do it. Lesson 2. Every runner knows that investing in good shoes is essential. Well, your RRSPs is like the pricey pair of runners. You can borrow from it to help with your down payment through the home buyer plans, which is HBP. Since April 2024, you can withdraw up to $60,000 tax-free or $120,000 for a couple. But like a new pair of shoes, you need to return the money within 15 years, or you'll feel the financial blisters, aka taxes. Only use it if you got a plan to pay it back. Lesson 3, you can't just show up on a race day and expect to run a full marathon if you've only been jogging 5K. You need to train. In home buying, you need to know your down payment because showing up to the bank with $500 and a dream isn't gonna cut it. Now, back in the good old days, aka prior to December 2024, if you bought a home over $1 million, you needed 20% down. Ouch. But as of December 2024, the rules changed. So now we need 5% on the first, $500,000, 10% up to $1.5 million, and 20% on anything over $1.5 million. Okay. That's a lot of numbers. So let's break it down with a real life example. Let's say you found the one, a home priced at $800,000. Your minimum down payment will be $55,000. 5% for the first $500,000, which equal to $25,000, plus 10% on the remaining $300,000, which equal to $30,000. Follow me? Now, let's say that you find your dream home for $1.3 million. Under the new rule, your down payment will be $105,000. 5% of the first $500,000 equal $25,000. 10% on the next $800,000 because $1.3 million minus $500,000 equal $800,000. So it equals to $80,000. Under the old rules, your down payment for $1.3 million home would have been $260,000. That is $155,000 difference. Now, let's push it to the limit. What happens if your dream home is over $1.5 million? Well, first of all, I'm single, so let's get married. Your total minimum down payment is $145,000, $25,000 for the first $500,000, minus $100,000 up to $1.5 million, and $20,000 on anything over $1.5 million. Under the old rule, you would have needed $320,000. That is an extra of $175,000. Unbelievable. So, moral of the story, train for the financial marathon. Know your numbers and don't wait until race day to check if your shoes fit. Lesson 4, if your down payment is less than 20%, you'll need CMHC mortgage insurance. It's like having a medical tent on standby in case you collapse on the financial track. This insurance protects the lender, not you, but you're the one paying for it, right? The cost depends on your down payment size, ranging from 2.8% to 4% of your mortgage. Translation, the smaller your down payment, the more you pay in extra fees. Annoying, but sometimes very necessary. And finally, lesson 5, let's talk about the big decision. Renting versus buying. Buying a home is like running outdoors. Harder at first, but you actually get somewhere. Renting is like using a treadmill. You keep paying, but you're running in place. Let's say rent is $2,500 a month. In 5 years, that's $150,000 spent with nothing to show for. But if you bought a home, even with mortgage payments, you're building equity, aka future wealth. If you want to buy but feel stuck, start small. Automate saving like a gym membership. Cut back on lattes, luxuries, and Amazon packages. Saving up for a down payment takes time, but even a slow jog is better than standing still. Before we wrap up, there's one last thing that you need to know. As before you cross the finish line and own a home, there will be one last hill, the land transfer tax. In Ontario, buyers pay land transfer tax when they take possession. If you're in Toronto, you pay it twice, provincial plus municipal. There are online calculators for land transfer tax that will guide you to your amount. First-time home buyers, you can get up to $4,000 back. So before you sprint to the finish, make sure that you budgeted for this last hurdle. Buying your first home is not easy, but it's worth it. Just like running a marathon, preparation is everything. Now, tell me, what's your biggest questions about buying your first home? Drop it in the comment, and if you found this helpful or just entertaining, hit like, subscribe, and I'll see you in the next video.